Welcome everyone to Vested Interest. This is Shane. We are back for our first stock pick of the day video in the month of September. Welcome to a brand new trading month. This is also my birthday month. The 21st is my birthday. So for any of you who want to wish me a happy birthday, it will be coming up on the 21st. Today we are going to cover one out of the energy sector, Chevron. You're probably very familiar with this company or have at least heard of it. This is an oil and gas company here. Before we get too far into the video, if you could do me a huge favor and hit that thumbs up button down below if you find any value in the content, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. We are a community of dividend growth investors. That's what we cover here. And a lot of you out there who are watching the video are not subscribed, so it really would help me out if you did that. Make sure you click that notification bell so you're notified whenever we put out any new content. We do these stock pick of the day videos Monday through Thursday whenever the market is open. Obviously, we didn't do one yesterday because the market was closed. We also do a weekly portfolio update video every Sunday morning. So again, make sure that notification bell is clicked. And watch the videos to the end if you would. All of that really helps with the YouTube algorithm. One other thing you could do is make sure you drop a comment down below. Let me know what you think of the video. Let me know what you think of Chevron. Doing all that really does help with the YouTube algorithm. It helps to spread the videos. It helps to let them know that you enjoy the videos and that you'd like them to spread it out to more people. So appreciate everyone who's done that, and very, very thankful for all of the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. So really appreciate all the subscribers, all the vested interest community out there who continue to support and watch the channel. You guys are awesome. And gals are awesome. Now, this is the vested interest stock screener. This is how we will be running through the video. This is also how I look at a company on a high level to see if I am interested in doing more of a deep dive into the financials of the company. If it will make it onto my watch list, it must meet 5 of 8. If it is a bank, a financial company like a bank or insurance company, then I throw in price to book, and then it must meet 6 of 9. So again, we'll run through this and see how it stacks up at the end. But back to Chevron. Check them out at www.chevron.com. That's www.chevron.com. That is their homepage where I pulled this information from. And they started out as Pacific Coast Oil Company. And they started out of California. Let's read a little bit about them. We won't read it all, but we'll read some of it. Spurred by memories of the gold rush, hordes of prospectors descended on California in the 1860s, seeking another kind of bounty. No, they weren't looking for gold. They were looking for that black gold or oil. Their early efforts were fruitless. Undeterred petroleum pioneers Demetrius Schofield and Frederick Taylor of the California Star Oil Works, a Chevron predecessor, took aim at Pico Canyon, a remote portion of the rugged Santa Susana Mountains. In September 1876, driller Alex Mentry succeeded in striking oil in Pico number 4, and the rest, as they say, is history. Obviously, there were many more oil wells to come, and that is where Chevron got its initial start. They were later bought out by another company, changed their name several times before they came Chevron, but they did get their start way back in the 1860s out in California. And I did live out in California for a little bit. You can still see oil wells when you drive around. It's crazy to see, too, because you'll be driving by and at real nice beaches down Highway 1, and then all of a sudden you'll see an oil refinery. So pretty crazy to see that. Like I say, you think of them out, like in the plains of Texas or out in the desert somewhere or way away from everyone. But like I said, it'd be a pretty well established area, everyone going to the beach, real nice area, and then boom, oil well. So pretty crazy to see out there. They're still drilling oil. Don't let anyone fool you. Oil is going to be around for the foreseeable future. We don't just use it for gasoline and oil in our cars, but we also use it for a lot of the petrochemical products that we use, plastic bottles, anything that has plastic in plastic car parts, anything that has plastic in it is typically oil-based as well. Now, onto their financials a little bit here. The reason we are looking at them today, they were down 2.22% on the day. We are talking about Chevron Corporation, ticker CVS, out of the energy sector, closed out the day at $144.66. Looks like they might be up slightly in the after hours whenever I pull this information. 52-week low as $139.62, as high as $171.70. So they are pretty close to their 52-week low here. Not very far off at all. Definitely within 15% of a 52-week low right now. They have a market cap of 262.522 billion, so a large cap company here, a beta of 1.08, so just slightly more volatile than the overall market. That's what beta means. Price to earnings PE ratio is sitting at $14.32 per share, which if you were to compare them to other companies like ExxonMobil in the same sector, they're pretty close. I think ExxonMobil was in the 13 range whenever I looked at them, though it's been a little while, so I might have to look at them again too if this downturn continues in oil. It looks like it is several companies. I looked at Exxon, it looked like it was down, Chevron was down. Chevron just happened to be the one that was down the most. Other ones out there, BP and some others, were down as well. But like I said, this one seemed to be down the most, so we thought we'd cover it. And there was a recent subscriber who mentioned this one. Sorry I didn't get your comment and plug it in here, but this one got me thinking about the oil and gas sector right now. So EPS, earnings per share, sitting at $10.10 per share. Earnings date sometime between October 25th and October 29th in that little window there, so tune back in for that. Forward dividend yield is $6.52. They are quarterly payers, so divide by 4, though if you give us a little bit of time, you'll see that here towards the end of the video. We'll cover the dividend per share per quarter and when they pay out. They do have a nice starting dividend yield, 4.41%. Ex-dividend date, August 19th. So that one is passed. It looks like they are going to pay out on September 10th. Unless you owned them August 18th or before, you will not get this September 10th payment that's coming up here. What is that, next week? You'll have to wait until the following payout. And one-year target, at least according to Yahoo Finance, 176. So they do see some upside as far as the price appreciation per share. And if you locked it in now, you'd be able to plug away that 4.41% dividend yield while you waited for that upside as well. Now we're going to look at dividend yield theory here. To do that, we take a look at 5-year dividend yield average of 4.43%. We compare it to the current 4.41%, or over here where it says forward 4.41%. Since it is lower than their 5-year dividend average, that speaks to slight overvaluation on this one, right? Just slightly lower than the dividend than the 5-year, so slight overvaluation. I mean, you could really call this right at fair value if you wanted to, but dividend yield theory technically says it's just a hair slightly overvalued. Payout ratio is under the 75% I like, so 62.18% there. Payout ratio, again, I like under 75%. That way they have a little bit more room to continue to raise that dividend, pay down debt, make acquisitions, reinvest back into the company, buy back shares if they want. But anything over 75%, unless it's a REIT or a company like a business development company that typically pay higher, again, I like under 75%, so they're well within that range there. And jumping down to free cash flow, I like growing free cash flow. A company typically will grow their dividend along with their growing free cash flow, as well as pay down debt, repurchase shares, do all the things that companies do with free cash flow. 2021 here, you can see 21.1 billion in free cash flow. 2022 up to 37 billion. Looks like a drop in 2023 down to 19.7. The trailing 12 months has them at 18.1 billion. So it looks like they're going to have a very similar year to 2023. You can also see they are aggressively repurchasing shares, especially the last few years. 2021, not as aggressively as the last few, but 1.3 billion repurchase shares. 2022, big jump up to 11.2 billion. 2023, up to 14.9 billion, but that does not quite account for, even though they went up in repurchase of shares, it doesn't quite account for the decrease in free cash flow. So I am calling 2023 a down year in free cash flow, and it looks like they're right back at it, repurchasing shares in 2024, 12.7. In the trailing 12 months, again, it covers all the 8 months that we're into, almost 9 months. September, we're into September, so 8 months, almost 9 months that we're into 2024, but we'll have to wait to see what the final numbers shake out at, which will include October, November, September, October, November, December. Now, jumping over to stockanalysis.com, the previous page was information brought to you by Yahoo Finance. I am not affiliated with either one of those sites. I always recommend more than one site to look at for information, so you can make sure the information you are getting is accurate and up to date. You pick any sites that you want. These are just 2 that I like to go to. And they have 15 stock analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $154. It currently sits 6.46% lower than their lowest estimate, so it needs to come back up to even hit their low. I do like it whenever it's under all of their estimates, including their low estimate. Average estimate of $182.33. So if you were to buy them now, that would be a potential 26.04% upside if it was to happen to hit their average price. And their high price of $206 would be a 42.4% increase from where it currently sits. And again, if you were to buy them now, you could lock in that 4.4% dividend yield. Now we're going to jump into statistics here and look at return on equity and return on invested capital. I like 10% or better for these metrics here. Return on equity beats that metric at 11.7 to 6%. Return on invested capital does not at 8.49%. So just a little bit lower than I like. I wouldn't let that be a deterrent. If everything else looked good to you, that would not be one that where it's low enough. You know, if this was a 3, a 2, or something like that, but 8.49 is not that far off. Now, I will not give them a check for this because it's got to be 10% or better, but that's pretty close. EPS growth, I like 5% or better forecasted over the next 5 years. They're sitting at 5.33%, so I like that. I do not like that revenue growth is forecasted to be in the negative, but I'm not surprised with it either. Oil is a cyclical business in nature, so you've got to ride the highs and lows of oil. You want to be buying in the low time and then ride the revenue back up. Actually, I bought this Chevron and ExxonMobil here. Would have been 3 or 4 years ago now whenever I started the portfolio, and I was buying them, you know, Chevron down in the $80, $90 range. I ran this up to a 90% gain and sold out of them, I think pretty close to where they are now, 138, 140, right in there with a very, very nice gain. And same thing with ExxonMobil, you know, 80, 90. I think it was actually 110% gain on ExxonMobil. It was a little bit better than Chevron, but that's how you play these. You buy these whenever they're depressed, whenever the price of oil is way low. These really come down, and then you ride them back up, and then they kind of do that cyclical nature over and over and over again. So let's jump over to the dividend yield theory, or I'm sorry, dividend history, and wrap this one up. So they are a quarterly payer. Again, payout ratio under 75%, 64.65%. They are growing the dividend. Very nice dividend growth of 7.56%. 37 years of dividend growth. Buyback yield is positive at 2.73%. Like to see that. That means they are efficiently buying back their shares. Shareholder yield is 7.21%. Very good numbers overall. They do pay out on the March, June, September, December timeframe like most companies do. Going back to February 2022 here, you can see they were paying $1.42. They raised that up in February 2023 to $1.51. They raised it up again February 2024 to $1.63. That's where it currently sits. I would expect if they're going to continue these raises, it will be February of 2025 for all of you shareholders out there. Now let's jump back into the screener. So understand the business. That's where we started. Check there. Growing free cash flow. They had the one down year in 2023. Growing dividend, yes. Check there. Nice dividend growth at over 7%. Dividend payout ratio of 75%. Yes, they're in the 60% range. Nice there. Dividend yield theory says it's potentially slightly and ever so slightly overvalued. Really right close to fair value. Buy below current cost basis. It is within 15% of a 52-week low. It is not in my portfolio, so it is not below my cost basis. Return on invested capital, return on equity over 10%. Return on equity return on invested capital is a little low. Earnings per share growth is over 5%. So there, so we've got 1, 2, 3, 4, 5. It does make it onto my watch list. This is an interesting one right now to keep an eye on. If oil prices were to continue to go lower, this one actually might break through that 52-week low instead of a new one. So this would be one I would keep an eye on. The oil industry in general, like I said, very cyclical in nature. So when oil prices, oil per barrel is what you want to look at. When that really falls down, a lot of these oil and gas companies do as well. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover, like Chevron in the Stock Pick of the Day series, go ahead and drop it down below. I'll work it into the rotation. Drop a comment. Let me know what you think of Chevron. Is it in your portfolio? Is it one you're watching? Is it one maybe you're adding right now? Would love to hear from you. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing during educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.